The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 15th day of November. If I had done the show just a couple of hours earlier, I'd say the Dow is down huge. And now I say that the Dow is down 10 points, 15 points, 12 points, 11 points, 9 points, just really chop, chop, chop. And at 25,070, it went all the way down to 24,787 earlier this morning. Right here, you'll see that the MACD in the daily chart is just about to cross negative. It isn't yet. This is the exact moment, especially with options expiration coming up tomorrow, where futures and options players can just do a chunk of stuff, and we're seeing that stuff right now. Here we go. The Dow now down 22. What's really important about this particular move is that within the context of the monthly chart, earlier today it was looking just terrible, but this is exactly the halfway point, and we've got really a very important series of weeks to coming up. Why? Because it's the kind of a holiday week for many of the people in the Wall Street, in the market, let's just say, getting ready for Thanksgiving, maybe taking off some time with the family, whatever. So that leaves 1 week in which to really push the market much higher. Now, I've heard a lot of talk about a crash. You know, I spoke about this some time ago when I had the sell signal on the Dow after that peak E in the Chapman wave on the at 26,951, little doji candle, leg E, doji candle, and I anticipated there should be a sharp pullback. So the following day, that's where we started the short position in the Dow on the 4th. And what I was looking at was, based on the weekly chart, I'm going to take a little time here. There's no real rush. I'll give you the numbers. Dow's down 45 at 25,034. S&P is up 3.41 at 2704. The Qs are actually now positive, up 66 at 165. I think that's 84. The comp index is up 35 points at 7170. The VIX index right now is at 2117. It's down just a fraction, but it's in the 21s. I mean, that's still saying there's selling pressure. And the Dow itself, now it's down 70 points. This weekly chart, let me just open this up because I want to look at the weekly and the monthly to show you exactly why this has been a big concern of mine. You see the technicals here in the weekly chart back in January at the high, and you see the technicals here at the 26,951, about 340 points higher, but it didn't close above the 26,616 level. And what we're looking at is that the MACD was good, but way underpowered when you compare it to that January high, and the stochastic ran back again into about the 95% area, but quickly fell. But what's really important is that the on-balance volume, this little blue line here, started its move down prior, and that was hinting that this was an aberration, that it was the rectangle formation right here, together with the cup formation that formed. The technique I say is within the Chapman wave methodology, you can have a buy mode within the rectangle formation if the bar or the bars on the way down kind of give you that flagpole feeling, and that's kind of what we saw. Now we're filling the gap. You know, when you look at it, the weekly chart is just trading between 26,000 and 24,000. It's been doing that for quite a while, with just under 24,000. What's the big deal? Well, the big deal is that under these circumstances, there are a number of sectors that have really taken it on the chin where they didn't ever before. Ever, I don't say ever in the sense that I'm talking about ever. I'm talking about ever in the past couple of years even, especially the last 2 years. So that made it really important. So on a purely technical basis, the MACD and the stochastic and the daily and the weekly chart very poor. And that monthly chart halfway through the month is if this was the last day of November, 30th of November, today, I would say, you know what? The MACD for the first time has crossed negative. The stochastic is at 80%, still okay, because above 80 and 80 plus is good. Under 80 says, be careful. I would say that the Dow is about very close to giving me my first sell signal in the monthly chart. I didn't even call this a sell signal. Remember when we made the top in the monthly chart in January and February? I said that Chapman wave Roman candle, we got to see how it plays out. There was a double low at the 23,340, 24,360 area. This is different. And we're going to see how different it is come the end of the month. End of the week even, tomorrow is important. How does this counter trend rally after the sharp move down? Where did we close today is going to be very important. Okay, enough with that. The Dow's down 72. The parameters to watch are obviously the low of the day, 24,780. I would say, I've been saying a close below 24,750. 24,850 is a warning, 24,000. I'm going to make it 24,700. A close below that in this particular time frame, meaning from now into Tuesday or Wednesday of this coming week, would be pretty negative. Why? Because it would really limit the upside. You can have fantastic bounces, but that 26,277 high that was made the second week of November, I don't know what it's going to take to move above that in this particular time frame if we pull back deeper from here. All right, let's go to the S&P. The S&P right now is now it's down. It was it's behaving a little better than the Dow. It is down 0.84. It's down 0.03. The Dow's down 0.32. So it's acting a little bit better. It's kind of filled that gap, that big gap that was after, that was the gap of the 20, is that the 24th? The 31st of October. That gap up, we've now filled that for the first time. That's important. But parameters to watch, 2670 was the low, 2665 starts to say, uh-oh, we're going to go all the way back down to the 2603 level. If that doesn't hold the support, on the upside, 2731 is resistance. Let's go to the Qs. 1, 2, 3. The QQQ trading at 165.67, up 47 cents. Has the pattern we were just discussing in the S&P. It's already filled the gap and now gone lower. This is just saying no strength here. That weekly chart is still very negative. You can have bounces, but I suspect the theme all the way around is lower highs and lower lows. Within the context of IWM, IWM is the Russell 2000 ETF. It's a little bit better on the day. It's up 0.44%. At 150.21, up 76 cents. But really both the daily, weekly, and monthly charts are just, I'd say, horrendous, but that's being polite. Gold. Where is gold? Gold's up 3.7 at 12.13. The stochastic's coming off that V-shaped bottom we discussed 2 days ago. And now we're seeing that the 9-period moving average has been tested, and the 1217 level has been the resistance. So gold is acting quite nicely here in a trading pattern between a kind of a rectangle formation. And I would just say the 1192 to 1228 area is kind of the range right now. I'll just quickly go to the dollar because I'd like to see where the dollar is. The dollar is up 4 cents, holding quite nicely.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, Basil Chapman. We're back, and I promised myself not to forget to do this, and I almost forgot. I want you to go through the different charts with the Chapman wave projections. These are projections that I developed, a technique that I developed, over 10 years ago, I think it is. I don't use them very often, just at turning points that I just want to check things out, because of course I've got many other techniques. But if you're looking, I've got right now the NQs. There was a question I had. What was the question? Yeah, NQs, how they're doing. So 6739 is the projection that I had as support. There are actually a couple. That's on the daily chart. On the 120 minutes was 6718. So the 10-minute chart and 6831. So there are a bunch of them. But what's really important to me is that this 6714 level to the 6709 on the NQ. This is the futures contract, index 100 futures, has that as support, and it has 6814 to 6829 as resistance. So when I look at this, I'm saying, okay, that's 67. What was the exact low? It went under that, I know. What was the low? I'm going to choose this particular contract right here. Okay, let me just drag this across. So the low was 67. Oh, I lost it. 67.12. Okay, so it went underneath 67.39, and then it utilized the shorter term parameters, and the one that really counted was 67.14 right there. And now it's rallied quite sharply, stalling a little bit as we speak, but it rallied, and 68.31 is the resistance that I see. So I'm looking at it, and when I look at a particular contract and I see in different time frames a whole bunch of either support, in this case it's the cyan colored or the green colored resistance, if I see that, it tells me that's a block, and that's a block of support levels that you got to take seriously. And then it's a block of resistance levels. So now let's look at this in real time and go to the NQ. And I just want you to do this to show you that even though this is kind of wild trading, borders are borders, and the way you can identify them and the way you can use them, it's really kind of important. And let me just go to the back again. So you can see it stopped Now, I've kept this in for years. I don't often look at it, but I just keep it in because we have someone who used to call my show, he actually calls Steve quite often, Garo, and he always speaks about this particular dotted line right here. And this dotted line is called, if I can ever remember the exact, parabolic SAR. And this parabolic SAR said, whew, thank goodness we did not go down below 66.81 because that would have triggered the acceleration to the downside. So this is a very good support. So I like to put these in and say, hey, when people talk about a moving average that they think is important, I happen to have some that I've worked on for quite some time now that I'm beginning to rely on a lot more. And they're just giving me the greatest security in terms of parameters that I can look at and that I think are important. So now I'm going to go to gold. You see gold right now is trading up 4.1. As we're speaking, it's gone a little bit higher. There are a couple of things that I spoke about yesterday. I spoke about crude oil. I spoke about that natural gas contract. Remember, we had a call and we were looking in great detail. And now I wanted to go to right here. So gold, where would gold stop on the downside? Well, I was looking at this closely, and it said to me, at 1196 on the daily, I've got very strong support. What exactly was the low that was made on the daily on the 13th? At 1196.6. So that worked out really well. I haven't done any trading on that. Why? Because we are still long the dollar. I still see the dollar as kind of the favorable instrument right now. But it's very interesting because the 120-minute chart had 1194.59, 1199, a whole bunch of support levels. And now we're looking at the resistance of 1216 to 1220. So keep that in mind. And so far, the high of the day is around about 1217. Okay, if you look at the crude oil, look at this, crude oil trading up a little bit now. It's trading up 49 cents. It should be way more if this is really a low of severity, but in fact, it's just there. So on the 120-minute chart, it had 55.89, but only after it made a lower low in the 55 area, it went to, let me just see if I can do this right now, it went to 54.94. But this is very interesting because look at the resistance in the monthly chart at that 77.62. And what was the high? The high was 77.04. I would say that's pretty darn close. So when I'm looking at this, the reason why I'm doing this is that I had a caller yesterday and we were looking at, actually I had an email and a caller and we were looking at natural gas. And as I was talking about it, Peaky in the den said, hey, wait a minute, I just read something about hedge fund that's blowing up because of the natural gas. As he said that, I said, okay, now we can have a slightly different, I was looking for this, and I call this leg G/C. I said, at the moment, it looks like G because it's still holding very well. And if it's G/C, we might have a little bit of a down day, and then maybe Friday we go to a higher high, and then you can start talking about shorting it. But there's one thing that I can say now that we know what the culprit is, because the heat, this is just the beginning of winter. Natural gas shouldn't have a move from the 340s or even 350s up into the 490s. This is crazy. Something's going on. Well, we looked at it and I said, if there is a sudden move of about 25 cents and it looks as if there is just no support at all, that's when you can go to the short side. And then you've got to, I can't remember if we discussed a lot of things, but one of the things I had in mind was you could have like two positions. You can have a position that just lets it ride to the downside, and you can have a position that says, I must have some kind of a stop. So one part of the position is a trading stop, and the other one is to get a stop right at your entry point. And if it goes below, you can lower that stop, but you have really two positions. And now look at the, I'm not sure, it was so quick. I'm not sure that Roy did that, but if he did, you would have seen a move yesterday that went to 4.92 on natural gas continuous contract, a high today of 4.80, and we are trading, if I had to say to you, guess where we're trading right now? You probably say, well, I'll pull back maybe 460, 450. No, try $4 after hitting a low of $3.93. That's a 1-point move from the high of yesterday to today, and almost one that kind of speed is crazy. There must be people that either made an absolute fortune, or even if they made a fortune, if they held on today, they would be losing a chunk. So if they timed it correctly, either on the upside and got out, or the downside and are holding, this is an amazing move for this particular vehicle. It is very unusual. All right, a couple of things I want to go through here using the same parameters. Let's just look at the Dow INDU. Got a lot of questions, a lot of callers, but let's just do this. The Dow, if I can just correctly type in dollar INDU, look, 24,553 is the intraday projection low. There's a whole bunch underneath there. We went down to 24,000, I think it was 870 something. Was it 787? And now we're running a little bit. I'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So I'm always reminded of a cartoon that I once when I was upon a time when I was a cartoonist, a cartoon that I drew. A guy, it used to be in the old days where you didn't get stock market news all day. You just kind of went out and you thought, okay, the Dow closed yesterday, whatever it is, and see where it is today. When I come back from work, guy leaves home and he comes back and he says, so how did the market do? He says to his wife, how did the market do today? She said, oh, it was unchanged. He said, oh, that's great. And then he looks and he sees that a chart of the Dow, and the chart was that during the day it had dropped huge, it had rallied huge, and it dropped again, then ran, and then it closed about unchanged. Ho hum, you know. So what you didn't see, it didn't matter. So this is kind of what we're looking at right now. I'd just say that the E-mini, if it can close above 27.12 in the next hour, close, and then hold there. I would have to say that if it holds there or higher through the next hour, through Steve's show, I'd say that that's really good to have a very nice close at the end of the day, especially with options expiration. They can do anything they want. They've done the short side, they've done the long side. They can, anything. So if, in fact, it starts to break down and goes under 26.97, I would say be careful for the close, because that means that every bit of energy is being usurped by selling pressure. Let's go back here. Questions I had about the dollar. Yeah, so look, the dollar DXY automatically 97.82. I spoke about this, was the resistance. Every resistance the automated resistance in the Chapman wave projections has been resistance. On the downside, 95.51 was the last one, and we went to 95.68. Now we've rallied, and we kind of trapped. The weekly chart broke above it, which is a good sign. But this moving average right here, this boundary line, it says, you know what? If it doesn't move quite sharply into the 97.85, 97.93 area, it could be stuck here for a little while. So I'm looking at this, and now you've even got the monthly chart with a very strong 97.90 resistance. Look at all these support resistance levels in the 120, but look at the support. It's got a lot of support. I think the dollar's stuck, and it's going to have a bigger move if one of three things happen. One is if gold actually suddenly takes the lead to whatever it is, maybe Brexit, maybe whatever it is, but there's a lot of extra uncertainty, then maybe gold as a hedge, just at least in the short time, suddenly becomes favorable again. And then we will see that gold breaks the 12.16. That's easy to do because already today it went to 12.17. But it breaks the 12.20 resistance, starts trading at 12.24. I think then the dollar, even though it's favorable right now, could find some kind of support. Let's look at the EUR-USD. I don't know if it works as well. Yep, it does. So the euro-dollar currency pair is trading right now. It's up just a little bit. And it shows it's at 1.32 and at 1.132, and it shows resistance and support levels. But I'm going to make it real clear that as far as I'm concerned, if there is a break below 1.15 at any stage in the next couple of days, that euro is going to be very negative. But if it's able to rally a little bit, there are a couple of resistances, and it can go to the 1.132 right now. It could test the 1.143 area. And if you look at, I'd rather do this now on the white background charts. I'll do it again, EUR-USD, just to show you because I've notated it. It's gone to a trough E. It's trying to test the 14-period moving average. It's a leg E in the weekly chart, and the stochastic's right at the level where it could try to rally because the MACD is holding quite nicely, although the histogram's still a little bit negative. So that's why I think this is a really important phase, because it's a fairly quiet phase in the market. It doesn't look like it, but we're going into a fairly quiet phase. Next week is usually a fairly low volume week. So we'll watch this closely, because if any break up or break down is going to really dictate probably the whole of November, the rest of November's trading parameters. So let's look at the USD JPY, which is the yen. Came off the low this morning. The low was it's trading at 113.45, down to 16 cents. Bips or pips or whatever we want to talk there. And 113.09 is the low. And yeah, it's trying its best to make a cup and a handle formation. The weekly chart is still pretty good. Monthly chart is still pretty good. So this is holding very nicely. I would say a break of 112.90 on the downside would be very negative, but any push above 114.21 to start leg D in the daily chart says, hey, watch out. We're probably going to go to the 114.58 previous major high, peak F high on the 18th of October, and that would start, if it goes 1 penny above, finally start leg E in the weekly chart. Okay, now a couple of things we want to look at just before we go to many of the questions. The TLT trading at a leg C, it isn't showing the kind of strength that you would expect in a move like this, down move in the market. So I'm just going to suggest to you that the trough D that we made back on the, I think that was the very first day of November. Yeah, the second was the second trading day of November, 111.90 low, and now it's at 114. It's up 3 points. It's not a big deal, but it is changing the direction a little bit. And finally, you got a trough F in the weekly chart with the MACD trying to turn up. The stochastic still very flat at 12.36, and that's just saying to me that if we look at the TNX, right? That is the 10-year, that double top that was made in the 32 area, that's pretty significant. And I'd say that that was a peak. Ooh, I redid that, ABC. Oh, that's the 10-year, yes. So the 30-year gave a peak D. The 30-year is the, I'm blank, oh, TYX. 30-year is made a peak D, a peak F in the daily, a peak D in the Chapman wave in the weekly, and that's pulling back quite sharply, but still the technical's holding. Look at this, 88% in the stochastic. MACD is good. So I wouldn't rule out high yields at this point, but I would say consolidation should go on a while longer. I don't see a new high. I don't see a reason for a new recovery high yet, but it does say that there's good support in the 33s. It's a 33.53 right now. There's good support in the 33s for the 30-year. All right, I think I've done almost everything. Did that. Crude oil, oh yes. Crude oil is trading now at 56.90. I said yesterday that I had a quick email from Jane, question about, is it time to get into the OIH? I said, not at that time. Yesterday I said, now you can just start a small position, but it really is it's a seek and search. Why? Because it's trying to form some kind of a bottom. The OIH is the oil sector ETF. And if you look at it, the MACD is making this W formation, but it needs to see the price move from 1905 up 20 cents into the 1980s, the 9-period moving average, and close there for the first time. It'll be the second time in weeks, over a month and a half. So this is very important. The outlook, I say, is just a bounce, but that was a place to maybe start a little position, but you got to have a tight stop, and it cannot go below yesterday's low of 18.60. Basil Chapman, Tiger Technicians Hour. Dow's down 19, S&P's up 4. We'll be back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So I just had an email saying, thanks for covering natural gas yesterday and today. I went out on a limb with a small position near the close with a DGAZ. Let's see. Was it the DG? Oh, TG. Oh, okay. And that yesterday the close was at 281. Yeah, 281. Okay. Oh, he got in at 315. Very good. Payoff came this morning as I thought it would. Just had to get confirmation when supply report came out. I guess I should take some off the table now and put a stop in for the rest. Thanks, Roy from Fort Worth. Hey, Roy, congratulations. You're the one that did the work. You're the one that brought it to my attention. And thrilled that you managed to do that because, you know, can you believe that this is something that was trading at 16 back at the end of October and then goes down to 2.81? Boy, that's tough. Congratulations. Yes, I definitely would. I think it's going to actually rally to try to fill some of the gap, but you need to see the high of oh my, 503. That's very high. And you need to see that 503 high of yesterday in the DGAZ contract. That is 3 times inverse natural gas. You need to see that taken out, and you need to see this contract not close at 3 or get to the 3.92 by 5 minutes to 4 this afternoon. You need to see it actually rally. I would even say it needs to go above 454, the high of today. It needs to go above that. And then I would absolutely say if it closes towards the high of the day, yes, you could take a risk and hold it overnight. You held it overnight here. Congratulations. You could hold it overnight. But I would then say to you, you know what? You've made a very big profit in a very short period of time. Split it into 3. You've got to take something off right now, or as you say, you're going to take something off to be judicious about this, just money management. And then if it goes close to the day's high, near the end of the 4 o'clock period, I would just take a little bit off. And then I'd say, you know what? If you gap up tomorrow, that's fantastic. So big deal. I don't have that full 2/3 position in. I have just 1/3 or whatever it is you decide. But it's a great move because I don't want to see overnight something happens and all of a sudden it's trading below your entry price and all of a sudden you've seen a whopping gain get just wiped out. So just think of it in money management because your eye was good, it means you're going to be able to probably repeat this whole thing somewhere else at some time over the next couple of months. You just have to do that a few times. And that's really great trading. I mean, people do that all the time in different things. You know, Dave White looks at options, and when he sees the most perfect time to get into options, that's when he piles in, and that's when you can do the very best. So, yeah, have a plan. That's all I'm saying. Congratulations, Roy. Now let's go to the other questions. Boeing, of course, always gets the question, where's Boeing going? Boeing's down 4.63. I just see nothing with Boeing right now. I think it's going to be a tough position until we get a major market low. I think that's going to still have to wait. Julie asked about the XLF. Oh, let's see. I haven't looked at it all. The XLF trading right now up 10 cents, but it was much lower. You know, I'm going to put the XLF into the category that I've maintained for quite a while, and that is at some point it's going to be I think the trigger, or it's going to be a participant in the next big move in the market. And until I see confirmation that the weekly chart is really starting to technically improve, and that'll help the monthly chart, I'm just kind of nervous about the XLF. Let's just see where Goldman is. Goldman is also a big part of it. Goldman's down 18 cents. It's really, Goldman's not acting very well at all. No, I'm just going to say I'm holding off, and I will give you parameters, and I'll just say to you the XLF, the financial S&P select ETF, is must hold 25.70. If it goes underneath that, it's going to fill that gap from the 30th of October. The high was 25.94, and I think it'll start to get towards, it'll go towards there. So this is an important moment. Julie wants to know about IYR. IYR is this is the iShares US REITs ETF. This is a commercial. I haven't filled this in for a long time. Let's do it now together. Chapman wave, identify the lowest, most obvious low bar, start your wave count. I mean, there are other techniques, but this is just the easy way to do it when you're doing it historically, because it's not current. We're doing what happened before. It went to a peak E, is digesting the gains that it made from the low in the 75s just early October, and now it's stopped at the 81 level. I'm just going to say keep your eye on the IYR, because if the IYR, which pulled back sharply today, it went down to 78.83. If it takes out 78.50 on a closing basis, that's just going to say to me that that 200-period moving average of 76.74 is going to become an attractor, a magnet, if it can hold underneath 70. Yeah, I'd say it's at 79.44. If it drops 2 points over the next week, be careful. But on the other hand, it's holding the 200-period moving average, holding quite nicely. Question to me is, would I buy it or would I sell it right now? Because it's holding so well in the daily, I'd say it's on my list of something to watch for at least a trade. But the weekly chart is, wow, that's not good action at all. So I'd be a little nervous about doing anything other than treating it as a trade, and I would wait until today's Thursday, Friday. I'd wait until Friday is closed and do some homework on the weekend to see whether or not it's a trade for the coming week. But it is holding quite nicely considering how the others have really tanked. Yeah. You can call the monthly, Kevin says, you can call the monthly a sell signal or sell mode, but at the end of the day, it doesn't mean a thing. If you ain't got that swing, no. It doesn't mean anything, and there's no actionable items to be taken away from it. Therefore, it's useless information. All right, yeah, well, you can say that. Let me just go to the Dow. What I'm doing is describing the action. I'm not saying because it's gone to a sell mode that it's going to go down, down, down. I'm saying it has reached a level where the MACD has gone negative. The stochastic's under 80%. This hasn't done that, right? So I haven't yet got any signal at all. And the price is under the 9-period moving average. Those are the conditions. And if that happens, it says I've gone to a sell signal, probably almost an immediate upgrade to a sell mode. But those are criteria that I look for. That's completely separate to the trading part of it. And what it's saying is that if I am starting to get very negative action in the last of the behemoths, this is the monthly chart, there's a likelihood that I'm going to get some kind of a hat trick top. It says just be careful. It's an explanation. If you look at the QQQ, I've already said that the Qs are, by the action last week, I need one more month because I don't want to do it the month that it makes a high and the month that it makes some kind of a low, to say it's gone to a sell anything, I need 1 month. And as it stands right now, the Qs would have to get to 172, up 7 points by the last day of November to change the fact that everything about it says it's really close to at least a sell signal. That means you've got the daily in sell mode, the weekly in sell mode, and now you're going to start a sell signal? That's serious. I'll be back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. Don't forget, Steve comes up, there comes Dave, and then Tom O'Brien. I'll be back tomorrow. Tomorrow is Technical Friday. We're going to get into the nitty-gritties. I'm going to use this, in fact. Someone remind me. The rig is what I was asked about. Is rig the same as the OIH? I'm just going to say to you, it's the most horrible-looking chart, but on a very short-term basis, it's attempting to make some kind of a bottom at 9.65. This is Transocean Limited Oil Driller. You know, yes, there's a little bit of a risk, and it's probably more risk than gain as of right this very moment. But if you're not in the OIH, if you're not doing the same as we were looking at earlier on, you could have a little nibble at 965 because the technicals are slowly improving just a tad. But you need to see by tomorrow, absolutely at the latest, without taking out the low that was made of 9.29 yesterday, you want to see the high of yesterday taken out, 994. It has to do it. If it does it really quickly, I think if it's established a very short-term base and it's a tradable thing, we get to 10.15, 10.48, then you got to watch the dollar. Now, remember what I said, whippy session today. This is really great intraday trading, but you've got to be careful. And that E-mini has now gone to 26.98 to the 200-period moving average after this little quick peak D that was made in the 2-minute chart, peak D in the 5-minute chart, only a B in the 10-minute chart, starting to fail again. Got to be really careful. And all I can say is we raised cash, started raising cash. I've been doing about this for about a couple of months. I've been saying it's not a bad time to raise cash. Tomorrow we'll go through the FANG stocks again. I don't want to rehash that stuff. Don't have time. Be careful. That's all I can say. You're going to get a whopper of a bounce at some point. We've seen whoppers of a bounce into whoppers of a slide. Trading band. Think trading band. Great for trading, but we're stuck in a range. I don't see a crash, but I do see lower highs and lower lows. So I think I'm going to leave with that. And as I leave, the question I had that I didn't get to was Apple. So let's just do that as we're going out. Apple's trading up 2.28. Having made a little leg E to the downside. Yeah, Apple could, tomorrow, options expiration, 189. They could try to close it out at 190. They can even move to the next strike. Be careful out there. I'll be back tomorrow. Have a great day. Thanks for being here. Stay tuned for Steve.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.